Now, 2011 was a bad year for China's energy industry. A slew of fiscal reports recently released by domestic oil, solar and wind power giants have been disappointing investors and analysts alike. And big changes in the energy sector already this year are set to have a long-lasting impact on the industry.
After a solid year for domestic solar and wind power firms in 2010, 2011 has proved to be a disappointment and the outlook is bleak. Last year literally knocked the air out of Goldwind, the country's largest wind turbine maker, as it saw its profits plummet by almost 69%, while revenues dropped 27%. Stiffer competition, lower prices, and a stricter project approval process hurt the company and others. The solar energy market didn't fare much better. China's Suntech Power, the world's largest solar panel maker, saw its fourth quarter revenue last year drop by almost 22% compared to the third quarter. The decline is even steeper compared to the same period in 2010. Another industry giant, LDK Solar, lowered the top end of its Q4 revenue estimate from $520 million to $450 million US. Caixin.com's chief editor Zhao Jianfei explains why the solar industry is suffering.
I think one part of the reason is that there are oversupply in previous few years. Too much companies investing in the solar panel production, and at the same time, we can see we have a financial crisis and the debt crisis in Europe, and even Germany are trying to cut the subsidies to the solar consumers.
Suntech noted that it expects shipments in the first quarter of this year to fall by some 30% compared with the weak fourth quarter of 2011. But the bad news doesn't stop there. The U.S. is imposing an import tax on Chinese-made solar panels. The U.S. Department of Commerce says Chinese firms receive government subsidies between 2.9% to 4.7%, and that the products will be levied by the same amount depending on the manufacturer. Zhao says the sector needs to change and outside help for it to recover.
It really depends whether the cost can be lower, and also the government can give more like an incentive or subsidies to the consumers.
Not every aspect of the energy sector is pessimistic. Despite reporting a 30% drop in net profits in the fourth quarter, state-owned oil conglomerate Sinopec announced it will invest more than $1 billion this year on developing the country's fledgling shale gas industry. Sinopec says it hopes to produce 2 billion cubic meters of the natural unconventional gas by 2015, almost a third of Beijing's total target of 6.5 billion cubic meters. Sinopec's announcement coincides with the landmark pact made between Royal Dutch Shell and the China National Petroleum Corp to explore, produce, and develop shale gas in China. Although China is thought to have the largest recoverable reserves of shale gas in the world at more than 25 trillion cubic meters, but it lacks the technology and the know-how to extract much of it. Zhao Jianfei explains why China's shale gas industry lagged behind.
The major source of energy for China is oil and coal, and also China are a much regulated economy. We only have 3 major oil companies, and they are government-owned companies. They are not so market-oriented, so they don't have the incentive to develop the technology, I think, because there are no much competition.
France's Total, BP, and Chevron are also teaming up with Chinese companies in search for shale gas. And as foreign companies look to China, the likes of Sinopec, PetroChina, and CNOOC are continuing their spending spree overseas for shale gas projects in the U.S. and Canada.
Leaders from the BRICS group of nations, Brazil, Russia, India, China and South Africa, met in New Delhi this week to discuss various matters, including plans for a joint development bank in the style of the World Bank. Earlier, I spoke to Bill Antholis, Managing Director of the Brooking Institution in Washington, D.C., who is currently midway through a 5-month study of China and India to examine different perspectives on global development trends. Well, Bill, first of all, what are the key economic messages to come out of this 4th BRICS summit?
That these 5 countries are serious about getting together. 4 of these meetings, the first meeting's sort of fun, the second meeting is a little more getting to know one another. By the time you've done 4 and you're talking about doing more things together, they're finding some commonality. And that in itself is a message. In terms of their impact on the global economy, I still think that that's largely going to be on a country-by-country basis. because they're still trying to figure out how they get along with one another bilaterally, let alone as a group.
Now, there's been talk about proposals for a new sort of development bank in the style of the World Bank. How will this affect how the BRICS nations deal with the US and with the EU?
My own sense of that is that it's something to give these countries a sense of focus for interacting with one another. And I think it also says to the US and EU that these countries are serious about their getting a bigger voting share in the World Bank. A development bank by the BRICS for other countries is a terrific idea, but many of them have such big development challenges internally that one can imagine just how hard it would be, first of all, for them in their internal politics to sell that, but then amongst one another to agree what the priorities for development would be. So, I'm not expecting that to sort of take off and happen in the next year or two before the next BRICS summit.
Now, looking more specifically at China and India, two countries that you've been studying over the past few months, first of all in India and now you're here in China. How do you think those two countries have reacted to, first of all, the slower than expected recovery in the US and the ongoing turmoil in the European zone?
Well, I've just come from 9 weeks in India. It's having a big effect in India. Their own growth numbers are they're ratcheting down what they expected, and it's affecting their domestic internal politics. They're probably going to have parliamentary elections in 2014, if not earlier than that. And the pace of economic growth is a big deal, and a big part of that has to do with the United States and Europe. In China, I've just arrived and I've been looking at it. Certainly, people here are bracing for slower economic growth, and some people are encouraging it because of how rapid it's been in the past and some of the distorted effects of how fast the economic growth has been. So some people may be breathing a sigh of relief here, but not too much relief, because too fast a slowdown in growth would be, I think, would be difficult for this place.
Now, they're two, of course, of the 5 members of the BRICS group. Some people have dismissed it as nothing but a catchy name, just an empty grouping. How well do you think this grouping of 5 nations can protect the interests of developing countries?
Well, I think what it can do is, as opposed to protect the interests, advance the interests. And advance the interests in a couple ways. There are issues about both industrial development in the developing world and rural development in the developing world that if these 5 countries can agree on, it would set a good set of principles for the rest of the developing world. When you break it down on global governance issue by global governance issue, they actually do bring a set of very diverse interests together. But the size of their economy and the GDP per capita is so different in these different places. They're not quite compatriots in the way that the OECD is.
Now, finally, and I'll let you set the criteria as to how you want to answer this question, but if you had to pick one, which would it be, China or India?
You know, my driver asked me about food and asked our family about the issue. And when it came back to me, I had to say both. There are things that I love about, I love Goa fish curry, but I've had just terrific meals here in China. China is ahead of India in terms of economic growth and in terms of seizing its once historic place as the world's biggest economy. India, for a time, was the world's biggest economy, was the great trading route, and I think they're just coming around to that. But here's the thing I would say is I wouldn't bet against India.
That was Bill Antholis from the Brookings Institution. Now, in our final section of the show, By the Numbers, we'll take a look at some of the figures that have been in the news over the past week. And this week, they're pretty big. First up, it's 70 million yuan. That's the total cost of a wedding thrown by a Chinese coal baron for his daughter in late March. Among the bride's dowry were 6 Ferrari sports cars, each costing millions of yuan. This may help to explain why China is poised to surpass Japan as the world's largest luxury goods market later this year. Next up, it's 470 million yuan. That's the amount of net profit China Construction Bank made every day throughout 2011. Its recently released annual report said the bank made nearly 170 billion yuan in net profits last year, up 25% from 2010. With many small manufacturers across China struggling financially, the sizable return has fueled heated discussion about whether banks still serve the real economy or just concentrate on their bottom line. And lastly today, it's 100 billion yuan. That's the amount of pension funds the Guangdong provincial government agreed to invest with China's national social security funds, which can make bond and stock investments. Prior to the agreement, the majority of Guangdong's 228 billion yuan pension funds was deposited in banks and eroded by inflation. Last year, the funds lost roughly 43 billion yuan in real terms. Well, that's all for this week's China Biz. I'm Mark Dreyer. Thanks for watching.